Hi, this is Rony Mullick, and you're watching the pre-market show. And let us look at how the US markets ended yesterday. US markets also came out with the Fed minutes, and in that it was discussed that the Fed will continue to raise interest rates until and unless the inflation pressures come under control. So that is definitely something negative for the markets, but the markets did not react that much is what we are seeing. So this is the S&P 500 chart from yesterday. You can see when the announcement came, the market shot up significantly, but then again it fell subsequently. But overall, markets opened with a gap down yesterday in US, and then it recovered and did not test the day's low. So it is almost flat. It was down 0.7 percentage, S&P 500, Nasdaq down 1.2 percentage, and Dow Jones down by 0.5 percentage is what we are seeing. And so let us look at the other things. And Asian markets right now, how they are trading. So Asian markets are trading all in the red right now. So the Hong Kong markets are down 0.6 percentage and falling down. The Japanese market has opened with a huge gap down and trying to move up, down 0.8 percentage. Chinese markets look quite bearish. You can see continuous red candles forming from the moment it opened today. So not a good sign. And Korean markets, in fact, they are doing well. They're down 0.35 percentage, but it continues to go up, is what we are seeing. So there is a negative sentiment all over the global markets right now, and possibly it's a profit booking setting in, especially since the European markets was negative yesterday after the high inflation data from UK. So that is possibly has changed the sentiments of the market slightly. Coming to crude oil prices continue to trade at $88 per barrel. So nothing much changed over there. Indian rupee has depreciated slightly by 0.2 percentage. It is now at 79.5, and the dollar index has remained same at 106. So we will be definitely looking at IT sector. Since Nasdaq was down, IT could be under some kind of selling pressure, but let us see how the markets react. Coming to Indian markets, we are seeing 17,935 as the opening level for SGX Nifty. That means our markets can open slightly down, but nothing significant. So it's a flat opening is what we're expecting. So if that is a flat opening, and then if the markets break the important levels like 17,900 on the downside, then we can expect a further move towards 17,800. So the last level of resistance you should be watching out for is 17,800. If that is broken, we will turn slightly bearish in the markets, and it's an expiry day. Things are likely to remain volatile. Open interest for Nifty is at 17,800 on the downside, 18,000 on the upside. So these are markets should likely to be trading between this 200-point range. If either is broken, then you can expect a good up move or down move. And let's see if the global markets are in a profit booking mode. So maybe the markets might trend downwards today. So that has to be we can be cautious for regarding that. On the upside, 18,000, 18,087. So these are the levels you watch out for. Case of Bank Nifty was bullish yesterday, and it ended above the 39,400 levels, which is a very important level. So let us expect that level to take support today, and if that is being broken, we can expect the first support to come around 39,100, and then 39,000 should act as a support. And finally, if that nothing works, 38,800 is the last level I'm watching out for today's expiry. And on the upside, definitely 39,500, 39,300, and 40,000. These are the levels on the upside you can expect in case of Bank Nifty. So this is what you can watch out for in case of Nifty and Bank Nifty as well. And coming to sectoral indices, we talked about Nifty IT index could be under selling pressure today because of Nasdaq being down, and expecting trending expiry. So expiry day volatility is likely to be there, and maybe the trend could be on the downside as well. So again, keep yourself ready for any situation. The data wise, we have the European inflation data coming in today at 2:30 p.m. and it came at it is expected to come out 8.9 percentage. In in the previous month it came at 8.6 percentage. So if you know, at the UK inflation yesterday, it came at 10.1 percentage, breaking the expectation. The expectation was 9.8, it came at 10.1, and that made the European markets negative. And today let us look at this inflation data coming in and where things stand. So we are seeing on an overall basis that Indian markets are resilient, Indian markets are strong because of FIIs. They're continuing to buy the market on every dip, and as long as they do so, the markets are likely to remain resilient despite the global markets coming under selling pressure. So we have to see if today as well we see a similar picture where the markets move lower and then the FIIs come in the second half and they bring the markets up. So that has to be seen today. So this is an expiry day. So if you are trading intraday for expiry, remain cautious because markets are likely to make violent moves. So that is all from my side, and thank you for watching.